Dow soars 1,000 points after Trump team and China dramatically lower tariffs. U.S. stocks surged on Monday after President Donald Trump's top trade officials brokered surprisingly dramatic de-escalation in trade tensions with China over the weekend, dropping tariffs to much lower levels, which some economists say could stave off a U.S. recession. The Dow rose more than 1,000 points, or 2.5%. The broader S&P 500 was 2.85% higher, and the tech-heavy NASDAQ composite gained 4%. U.S. stocks were set to erase all their losses since Trump's April 2nd Liberation Day trade announcement, which placed a 10% tariff on practically all goods coming into the United States and set significantly higher tariffs on dozens of countries. Trump paused most of those tariffs just days after they went into effect, but jacked up import taxes on China, eventually to 145% on most Chinese imports. In turn, China hiked tariffs on U.S. goods to 125%. The tit-for-tat trade war had effectively stopped trade between the two countries, risking substantial price hikes and shortages. Trump and Treasury Secretary Scott Bessent both had said in recent weeks that tariffs on China had grown unsustainably high, and a détente was necessary. But few believe that the result of the discussions between Bessent, U.S. Trade Representative Jamieson Greer, and their Chinese counterparts in Geneva this weekend was going to be quite so significant. Both sides agreed to axe tariffs by 115 percentage points, still leaving the levies considerably higher than where they were before Trump took office in January, but much lower than the historic level over the past month that deeply concerned American businesses, consumers, economists, and investors. Another key element of the discussions, Bessent said the U.S. and China had put in place a mechanism to avoid raising tariffs on each other again, suggesting that the worst of the trade war may be behind us. There are still lots of factors pointing away from a global recession, and this morning's news of lower U.S.-China tariffs adds to that evidence. Henry Allen, a strategist at Deutsche Bank, said in a note to investors Monday morning, "The market's resilience itself is making a recession less likely by easing financial conditions. And policymakers don't want a downer or market turmoil either, as we saw with the 90-day extension to the reciprocal tariffs.